Introduction. The purpose of the market outlook is for us all to have an elite mastery of the forex market to an advanced level. The forex market is a decentralized market that runs 24/7 from Mondays to Fridays. It has a market capitalization of approximately $8 trillion daily. Dominant and non-dominant market participants. At the top and in the middle of the hierarchy, we have the dominant market participants. That is the central banks and the large financial institutions. At the bottom, we have the non-dominant market participants. Those are the retail traders. In a nutshell, the dominant market participants make up of 95% of the market participants, while the remaining 5% are the non-dominant market participants. Those are the retail traders. This is according to research and data from the Bank of International Settlement, the Bank for Central Banks. Market mechanics. Market mechanics is a unique hybrid trading strategy that utilizes technical and fundamental constants to generate accurate trading signals. Power of 3, AMD chronological order. On Fridays, we have the accumulation phase. On Mondays, we have the manipulation phase. On Tuesdays, Wednesdays, and Thursdays, we have the distribution phase. Therefore, we do not trade on Fridays and Mondays, as these are the accumulation and manipulation phase of the market. Power of 3, AMD chronological order. The Asian session is the accumulation phase, the London session is the manipulation phase, and the New York session is the distribution phase. So we do not trade the Asian session, as this is the accumulation phase, but we are allowed to trade the London session since it sometimes overlaps with the New York session. Power of 3, candlestick pattern order. Unique candlestick reveal mass psychology that symbolizes the power of 3, the accumulation, manipulation, and distribution. Below are the images of the candlestick showcasing the mass psychology and movement of the market. We have the bullish and the bearish candlestick patterns. Liquidity and trap zones. All the market concerns about is liquidity and nothing else. Liquidity is basically points in the chart where majority of orders are pending to be filled. Thus, liquidity is the energy of the market. Without liquidity, the market will not move. These zones are as follows: yearly high and low, monthly high and low, weekly high and low, daily high and low, swing high and low. Need to explain candlesticks. As you can see, price rallying up, creating an uptrend with a cluster of green candles. These green candles signify buying pressure. On the other hand, as you can see, price ranging in this choppy market, creating a cluster of white candles. These white candles signify selling pressure. Meanwhile, a candle that is neither white nor green, let us go and check on another time frame. A candle that is neither white nor green, like this candle, this candle, it signifies indecision in the market. That is, there is neither buying nor selling pressure, but an equilibrium of buying and selling pressure. So this is more like a draw. The buyers are no more than the sellers, neither are the sellers no more than the buyers, so they both hold their dominance. For the sake of clarity, we use a 4-hour chart for our technical analysis. That is because, in my opinion, the 4-hour chart is easier to focus on for an individual that trades manually. However, if you are a scalper, a high frequency trader, or a trader who uses bots, algorithm, and so on, you can use a lower time frame for your analysis. However, as a limited human that I am, it is easier to track the 4-hour chart, as it is only made up of 6 candles, dividing each session into 2 candles each. In this red box here is the Asian range. So according to the liquidity providers concept, we look out for the Asian range, as this is the market maker strap, and this gives us an insight into the overall direction of the market for the day. So let us get straight to business. On Euro USD at the opening of the Asian session, we can see a buy candle, meaning that buyers are attempting to push the price up. However, they failed to break the high of yesterday, and the second half of the Asian session, we can see the sellers attempting to push price down, but they failed to break the low of the day, and price is in a range. We can infer from this that we expect a sell to buy. You need to keep a concept in mind. The market buys to sell and the market sells to buy. What this means that before the market buys, you would see a sell candle or selling pressure. Likewise, before the market sells, you will see buying pressure. The reason for this is because forex trading is a zero-sum game. So for the buyers to make money, they need to take the money away from sellers. Likewise, for the sellers to make money, they need to take the money away from buyers, because we all know this is a zero-sum game. Dog eats dog. So as a buyer, you need to leverage on the weakness of the sellers, and as a seller, you need to leverage on the weakness of the buyers. So the liquidity providers concept makes this very easy for us to do, because before we take a decision, we need to see the sellers in place before we take a decision to buy. Doing this, we go against the herd, and this is a predatory strategy, as it is an aggressive strategy, the strategy used by the financial institution, central banks, your brokers, hedge funds, and so on. They look out for liquidity because they trade large volumes and they cannot just scale in and scale out of the market anyway. So they need a compilation of liquidity. They need a lot of orders to have been filled so their position can be filled and their banks can be well fed. So now on Euro USD, as you can see, the closing of the Asian session ending in a bearish candle, so we expect a sell to buy, and for a sell to buy to occur, we need the low of the day to be broken, so more sellers are induced to take more sell position. If that happens, then what happens next? Then the buyers put in pressure and push price up, break the high of the day, break the structure further up. Then we can conclude that the euro will value against the US dollar. Now on USD card, at the opening of the Asian session, we can see the buyers attempting to push price up, and the second half the buyers live up to expectation, pushing price further up. Nevertheless, they failed to break the high of yesterday. Following from this, we expect a buy to sell. So we expect the high of the day to be broken, as currently the high of the day is the closing of the Asian range. So by the London Open, we expect the high of the day to be broken to manipulate more buyers. Just because you are seeing this buy candle doesn't mean you should just enter the market and start buying, or just because you come to the chart and you see sell candles, it doesn't mean you should just enter the market and start selling. You need to know what is going on. When you know what is going on, then you can make a logical conclusion in regards to your trading style. So we expect a buy to sell. We expect this high to be further made to induce more buyers to scale in. Once they scale in, tada, the sellers take money away from them, sell this candle down with one or two candles and put in more selling pressure, so we can conclude the US dollar will weaken against the Canadian dollar. On USD CHF, at the opening of the Asian session, we can see buyers trying to put in pressure. However, they make a very minute momentum, and the second half the buyers continue their pressure, which is also minute, and this is a range. Following from this, we expect the high of the day to be, we expect an inducement, the high of the day to be broken to induce more buyers to take position, and the low of the day to be broken with a bearish candle, one or two candles. In whatever strategy you make, always make your decision based on the close of a candle. Don't make your decision when a candle is forming, because when a candle is forming, as long as it isn't closed yet, anything can happen. So now, for instance, let me say that a candle is forming and it is bullish, then you make a decision to buy. It can close as a bearish candle. Likewise, if a candle is bearish and you make a decision to sell, it can close as a bullish candle. On USD JPY, at the opening of the Asian session, you can see buyers putting in pressure. However, they barely make much of a move, and the second half you can see the sellers. Following from this, you expect a sell to buy, so you expect the low of the day to be broken to induce more sellers, and the high of the day to further be broken for the buyers to push pressure up with an aggressive candle, either one or two candles. Then we can conclude that a counter move is made and the US dollar will value against the Japanese yen. GBP USD, I would want you to do the analysis on your own and look out for zones. On USD CNH, let me do this analysis for you. At the opening of the Asian session, we can see the buyers putting in pressure, and the second half you can see the buyers spiking the high of the day and the low of the day. However, this is not much of a move, so this doesn't mean that this will continue buying, as we expect buy to sell. So we expect the high of the day to be broken and the sellers to put in more pressure, break the low of the day. That is if a counter trend sell pattern is to be formed. However, if that doesn't form, I would expect this low of the day to be broken as well, as there is no strong support in this zone. NZD USD, do this analysis on your own. GJ, let me put you through. At the opening of the Asian session, we can see buyers making a good move. However, they failed to break the high of yesterday, and the second half, the sellers switching dominance. However, they barely dominate, not breaking the low of the day but ranging within the first half of the Asian session. So from this, we expect a sell to buy. We expect the low of the day to be broken to induce more sellers. Then later on during the London session, the high of the day to be broken by the buyers with one or two candles. Those one or two candles need to close as bullish candles, and there is a way this pattern forms. On silver, we can see a classic AMD playing out. This is the buy to sell. Here we can see the buyers in this zone, and what happens next? Then the sellers take over momentum, induce more buyers to the upside, then break this structure down. However, this structure needs to break further down for us to conclude that silver will sell. So the opening of the London session, we can see it also as this strong resistance is being retested with an impulsive move. So you need to be very careful if an entry should be made on this pair. However, fundamentally, today is a no trade day. We don't trade on Fridays, as today is the market makers accumulation phase. See, gold, do the analysis on your own. JPY, do it on your own. Let me do that for DXY. On DXY, at the opening of the Asian session, we can see the buyers trying to push price up. However, they failed to break the high of yesterday, and the second half we can see a doji candle and indecision candle. Following from this is an invalidated setup. So this setup is invalidated. On DXY, we do not expect any clear direction, so we leave price to do whatever it feels like doing. On BTC USD, we can see the sellers in the first half pushing price down. Second half, they push price further down. However, following from this, we expect a sell to buy. So we expect the low of the day to be broken during the London session to induce more sellers, then price to push up, break the high of yesterday. Buyers put in pressure, then we can conclude that the BTC will sell further up. AUD do the analysis on your own. Plan your trade, trade your plan, and most importantly, manage your risk and emotion. I wish you a peaceful year ahead.